Has the RBA made a mistake?
Time will tell on that one. Monetary policy is not an exact science, as we've learned over the last few years. But we have cut rates at a time when the Reserve Bank itself has revised up their inflation forecast for 2026 and see a number of risks in the economy. So there are a number of paths to getting inflation down, and we've kicked off the easing cycle a little earlier than we would have expected, and that's going to mean that the easing cycle is slower than it would have been.
The RBA admits it may have overestimated the level of unemployment needed to get inflation back to the midpoint of the target band. Do you believe the labour market remains an upside risk to inflation?
We absolutely think the labour market is an upside risk, and we think that's part of the reason why the Reserve Bank have revised up those inflation forecasts in 2026. Now, to be fair, nobody knows where full employment in the economy is. It's one of those economic concepts that we only see after we've passed it. And we've seen a lot of structural change in the Australian labour market post-pandemic. In fact, if you go back to 2019, full employment was considered to be in the high 4s or even 5%. Now we've got an unemployment rate at 4%, and it does look like wage growth is peaking. So I suspect this work and this assessment and debate about where full employment will remain very topical throughout 2025 and indeed the easing cycle overall.
Joe, up until now, the RBA had expected that rate would be at about 4.5%. Where do you think the NAIRU is?
So our current estimate is something around 4.3 or 4.4% unemployment rate. It may be a little bit lower. We've been having the same conversations here at Barrenjoey that we expect are happening inside the RBA. That is, the unemployment rate's lower than we thought. Underemployment is also lower than we thought, but we are seeing signs that wage growth is starting to ease, and we are seeing, of course, inflation come down. So there is a genuine question mark about could that full employment rate be as low as 4%? And I think there's just a lot of work to be done. And the honest answer is that inflation data itself will guide us. If inflation continues to miss on the downside to the RBA's inflation forecast, that will give them confidence that that NAIRU is lower than they thought.
The Governor has noted uncertainty exists in relation to policy settings for international trade, that is tariffs. Is the Treasurer premature in calling a soft landing for the economy?
Well, certainly we're seeing a lot of policy uncertainty, particularly coming out of the US. Tariffs are one element of that. And actually, President Trump's expected policies around immigration are also quite inflationary because of the impact on the US labour market. I think at this point, it's just very unclear what we will actually see Trump execute in terms of those policies, what the sequencing of that, what the time frame of that will be. And then, of course, for Australia, it's not so much the direct impact of tariffs, it's the impact that comes through our largest trading partner, China. So then that will also depend on what sort of retaliatory tariffs they put in place and the stimulus that they put in place to support their own economic growth. So, look, there's a lot of uncertainty out there globally and quite a bit of uncertainty out there for Australia itself and our domestic economic cycle. Landing that soft landing, that takes time to get to. We've definitely made progress. We're definitely in a better place than many other economies. For example, Canada and New Zealand, where the unemployment rate has lifted well above 5%. But it's just one of those things that we probably need to complete the whole cycle before we really call victory on the trade-offs and the policy path that we chose.
Financial markets had factored in 4 rate cuts within 12 months. How many do you see? And is this as good a moment as any in terms of the economic story for the Prime Minister to call the election?
So the Governor herself pushed back on that market pricing quite strongly in the post-meeting press conference today. She said she thought there was too many rate cuts priced in, that there was too much uncertainty. In fact, she described today's rate cut as taking away the insurance rate hike that we had in late 2023. So it does seem like this is going to be quite an elongated rate cutting cycle and a very shallow one. If we look back in history, the RBA has typically cut back-to-back, 2 meetings in a row, and it doesn't seem very likely now that we will get that. In terms of our forecasts, they're very much under review. You know, we had expected the RBA to hold today. We've got the cut. We've had a bit of information in their forecasts. So we'll be reviewing those. But look, it does look like something perhaps 2 cuts this year seems more likely than the 4 that the markets got priced in.
And so, Joe, in terms of election timing and whether interest rate cuts might sway it, if you don't see one at the next meeting, this is as good a time as any for the Prime Minister to call it.
Well, I think certainly many commentators are expecting an election to be called for some time in early to mid-April in the next week or so on the back of this rate cut. I'm an economist, but if we look at 2024, what we saw in those number of elections, remember that was a record year for elections around the world, is that cost of living concerns and high inflation hurt incumbent governments in democracies. Rate cut relief will be very welcomed by many Australians, so it wouldn't be surprised to see an election called earlier than that mid-May deadline.
Joe Masters, thank you.
Pleasure. Thanks for having me.